Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.8153 mark, and here on TradingView the market is down by 0.09%. and in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot structures, the Fibonacci's, and also the key areas of support and resistances. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Polygon Matic chart. Polygon Matic, from these low prices that we had been trading within, we saw a very nice impulsive movement taking us to an all-time high at around the $2.9 mark, in a movement that I've been terming as a higher Elliott wave count 1 to the upside. And after seeing the all-time high, we had been seeing lower prices in this massive ABC corrective structure right here, which took us back to around the $0.32 mark, in a movement that I'm terming as a higher Elliott wave count 2, and there are chances that we might have seen the low for that higher Elliott wave count 2, and right now we might be in that movement to the upside in the formation of that higher Elliott wave count 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5 to the upside, and sketching out a minimum target area to the upside in the formation of this wave 3 using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $5 mark, and that is the minimum that I will expect that wave 3 to the upside to do before we see a wave 4, and then continue pushing higher in the formation of that wave 5, and that is my long-term scenario. And because the wave 3 to the upside is an impulsive wave, we also expect to see fractal waves in formation within that third wave to the upside, having the wave 5 completing the formation of that higher Elliott wave count 3 to the upside. And I believe that is what is playing out here on the Phantom down the Polygon Matic chart, that is on the 4-hour chart. And jumping to the 4-hour chart for further analysis, you can see I have this Elliott wave structure in blue, which represents the fractal wave information within that higher Elliott wave count 3, and that is so because the wave 3 to the upside is an impulsive wave, and I believe we have completed the formation of this first wave to the upside in blue. And in the formation of that first wave, which is also an impulsive wave, we also expected to see fractal waves in formation within that first wave, and that is well represented here in this Elliott wave structure in yellow, having the wave 5 of this Elliott wave structure in yellow completing the formation of that wave 1 to the upside in blue. And after seeing the formation of a higher Elliott wave count 1, whatever we expect next is a bit of a retracement to the lower side in the formation of a second wave, and that is my primary scenario that I'm expecting to play out here on the Polygon Matic chart. And because the second wave is a corrective wave, we also expect to see an ABC corrective structure in formation on this chart. And there are two ways we can have that ABC corrective structure, and that is what I'm going to use to give you the short-term scenarios that I'm expecting to play out. But before I get to the ABC corrective structures, I have chart patterns that we have information over here, which are giving us other possible scenarios that we cannot ignore. And you can see we had been trading within this channel, which is right here, and we saw a breakout out of the channel to the lower side, and that is after losing the 20-day MA, when we have continued pushing even lower, getting back to the key area of support at around the $0.78 mark. And that key area of support seems to have given us support because you can see we are seeing a bit of a bounce to the upside, and that gives me the very first possible scenario that can play out here on the Polygon Matic chart. There are chances that we might continue pushing higher, get back to the area of resistance at around the $0.95 mark, and once that happens and we manage to break above that key area of resistance, there are chances of seeing a retest of the key area of resistance before we continue pushing even higher and maybe make a new high. There is also a possibility that in case we continue pushing higher, get back to the area at around the $0.95 mark, we might get rejected and expect a bit of a pullback over here. And in that movement, I will expect Polygon Matic to lose the key area of support at around the $0.78 mark. And once that happens, then we can even see a retest, expect a retest of that key area of support, and then continue pushing even lower. Those are the two possible scenarios that can play out, basing it on the key area of support and resistances. And getting back to the ABC corrective structure, which is also giving us some two short-term scenarios that can play out. There are two possible ways I can have that ABC corrective structure on this chart, and the very first way to have that ABC corrective structure is having this as a massive wave A, then I'm expecting a bit of a bounce to the upside in the formation of that wave B, then expect an impulsive movement over here in the formation of that wave C to fully maximize the formation of that second wave, and sketching out a minimum target area to the upside in the formation of this wave B using the Fibonacci's connecting them from the high of the wave A to the low of the wave A. That gives me a minimum retracement area between the fib level 0.5 and the fib level 0.382, and I can mark that target area here on the charts, which perfectly lies between the $0.96 mark and the $1.09 mark. That is the minimum that I'm expecting that wave B to the upside to do, and for that to happen we need to continue holding above the $0.78 mark, which is a key area of support, see that bounce to the upside, manage to break above the key area of resistance at around the $0.95 mark, see a retest and fully maximize that red target area in the formation of that wave B. And once that plays out, then we can expect an impulsive movement to the lower side in the formation of that wave C. And there are also target areas using the Fibonacci's that we also need to continue holding above, and I think we have lost those key areas on the Fibonacci's, because if I use the fibs connecting them from this low down here to the high at around the $0.94 mark, that gives me a minimum retracement area in this wave right here between the fib level 0.382 and the fib level 0.618, and I can mark that target area here on the charts, and that perfectly lies between the $0.87 mark and the $0.83 mark, which is a target area that we have lost, and we have continued pushing lower, making it back to around the $0.78 mark. And that brings about the second possible scenario of having that ABC corrective structure, and that is after losing this target area between the $0.87 mark and the $0.83 mark. The other possible way of having that ABC corrective structure is having this as a massive wave A. Then we saw a bit of a bounce to the upside, making a high at around the $1.17 mark in the formation of that wave B. And in case we lose that $0.78 mark, which is a key area of support, and continue pushing lower, then that will be a straight sell-off in the formation of this wave C to fully maximize the formation of that higher Elliott wave count too. Those are the two possible ways we can have that ABC corrective structure, and those are my two possible scenarios basing it on the Elliott wave structure, that is the ABC corrective structures, and also the areas of support and resistances. And those are my two short-term scenarios, and also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI we are trading at around the 34 mark, meaning we have massive room for us to support any movements to the upside, get back above the $0.95 mark and make a high within this red target area in the formation of that massive ABC corrective structure. Then from there expect a bit of a retracement to the lower side in the formation of that wave C. Also any movements to the lower side will still be supported. Also taking a look at the MACD, here on the MACD we have printed a bearish crossover here, but you can see we are seeing a decrease in the ascending momentum, meaning very soon we might be able to print a bullish cross. So let's be patient and see how that plays out, and maybe expect a bit of a recovery here on the Polygon Matic chart, given the key area of support at around the $0.78 mark. And that's the update for Polygon Matic.